Okay, there you go. Ayan, we're live now. We welcome. It's been a long day today. It's Wednesday. I started my day like at 6 in the morning. We have an early networking event. Um, Referral network. There are so many other organizations that are that we have here in Dallas, Texas. Referral networking. It's there are some organization or networking specifically just to net referrals. In the morning. So that's God, it's the weather right now. It's crazy here. And then also, so this kind of network is highly recommended for people that would like to grow their business through referrals because the organization meet up maybe 7:30 until 8:30, less than an hour only, and they talk about uh, they complement each other by bringing business. For example, financial planner who need tax planners, or this digital marketing company who needs business insurance. So it's a good network from 7:30. All of this organization, you can find them through Meetup. And now we're heading. And then after that, today I just went through two different networking organization meant for growing each other's businesses. Some referral network, they're not exclusive, which means they can refer to different companies that offer the same services. But there are some organizations that requires membership that they will require that you get that kind of exclusivity. So it's something that nice to know in Dallas. Monday to Friday, they have different organizations. Either in Uptown or other, even in Arlington, Louisville, Richardson, Carrollton, Addison, they have different organization that offer this kind of group. And the group consists sometimes usually 20, minimum of 20 members and more. So it's a good day to start. The only thing organization that I think I'm not going to be part of are organization that meet up for lunch, because since I don't eat lunch for the past months, I get used to eating after 3 p.m. or 5 because of intermittent fasting. So that's something uh, that I prefer not to eat. It's just a matter of lifestyle and preferences. And also at the same time, I think another networking tips, I try to be more cost effective. It means to say that I don't need to pay every organization every year, because it's important to know what they bring and how they promote your business. Because there are some organizations that are charging, this fees can vary annually from $90 a year to $2,000. So that's why you don't really want to pay right there and then if you know that this is not the good fit for you. You're checking the energy, their organization, how do they conduct their business, do they have lunch? But because for me, I don't, because you pay extra on being on top of the annual membership. You also have to pay extra on the food, which is $25 per week. So if you're going to do the math, that's, and then it's just doubling the investment, but not the networking opportunity. Also, if most of your time you're gonna eat 80%, if it's only 1.5 hour and then an hour of eating, I don't really, something that's not my preference. Maybe other they prefer it, but it's not my thing. But anyways, moving forward, we still are serving and providing you guys contents from business life and taxes, because our goal is to increase your cash flow but not your taxes. What we do, provide you some insights on, in terms of investment. We're talking about, this is a whole week, we're just throwing around these bullets of investments that other people, we haven't talked about. One question that pop out on some of our meetings are, what's the difference of term and whole life? The term insurance is like renting a car, but it or leasing a car, but in certain time, versus owning a car. So the same thing versus term and whole life policy. A term only covers 30, maybe 30 years policy, but they are way cheaper, but they do offer any lump sum money in case of death of the policyholder or in terms of sickness. There are some term insurance that give up to 80% of the policy. So, for example, you're insured by $100,000. They when the policy, the mom that's insured passed away, the family member get $100,000. But if the mom got diagnosed with, it's important to know that the term insurance should have a living benefit rider or sickness rider that they can get up to 80% or 80,000 of the death benefit during the course of the treatment for the policyholder. So where that's the difference. Whereas the whole life, it doesn't have that kind of expiration period in terms like 30 years. It could be until your age 100 years old, you would be able to use. The affordability, term insurance is way cheaper compared than whole life, and although the coverage is shorter. Yan. And then there's also like a cash value for term doesn't typically term insurance doesn't have cash value, whereas whole life and some type of whole life they have cash value. So but the good thing about the term and life insurance, they or whole life insurance, they both offer these are all tax free income. So when you receive the money, because a lump sum money either for sickness or for death of the policyholder, you don't need to pay taxes. And one thing that we bump into conversation also is setting up a trust. Another a trust is also like an asset protection where you can protect yourself from paying inheritance tax. So that's the reason why having a trust, it does not pass the tax to the beneficiaries. And that's the common problem with other celebrities like Whitney Houston and Michael Jackson. I think they're not fully tax protected or asset protected. That's why they were the inherited money was just collected by the government because of the lump sum or the numerous tax. Now we're gonna go over what are the other investments. So let's discuss about real estate. Again, we discussed this in my one of my live chat that real estate is a good investment uh, because number one, you it also upset your taxable income because of the process called depreciation. So whatever, if you're using your house, for example, as a home office, or you're using buy residential real estate for rental property, whether it's fourplex, duplex, you can benefit from the bonus depreciation or the depreciation, which means it's not an actual expense, but the wear and tear cost of the property of your rental property of your house, it can be offset your taxable income. The other benefit of the having a real estate as your investment, whether you're living here or renting it out separate from your house, it's income generation. So it's a passive income because you don't need to be there 24/7. It still generates money because somebody's renting. But of course, you need to find a good tenant that doesn't damage your properties, doesn't put anything. They don't try to deconstruct on your company on your house any wear and tear. That's a good. That's why it's important to find a good tenant. The other option about the source of income is Airbnb. The difference of Airbnb versus traditional tenants, they have longer term tenant that would sign up for 6 months to 1 year. That's a good deal, or even more, because you don't want to deal from one person to the other. However, you don't have the chance to increase the rent if in case you have a longer tenant. That's the only drawback. The other benefit, whereas the other benefit of Airbnb, it actually the Airbnb, there's a rule. You can actually market yourself through the platform of Airbnb. You have higher chance of getting booked on your apartment, or either the room you can rent it out, And also it automatically collects the payment. The Airbnb takes care of that. Then also you can select your tenant faster because of the 5 star. You need to approve. You need to check the background, the background or the history of the tenant that you would like to do to rent your room as an Airbnb. Income generation. The now what are the drawbacks of having a real estate for rental or owning? Number one, it's not cash liquid, which means to say if you have need money tomorrow, you cannot sell your real estate tomorrow. That is the problem. And then the other thing is, so they're not cash liquid. The other thing that you have on the standpoint is what you call the depreciation recapture. So basically, any depreciation that you applied to that house or rental property, and you decided to sell that house in the few years from now, the depreciation cost that you use might be able to apply as a taxable income. But this is nitty gritty. You need to talk to a tax professional or us. But again, this is only an informational purposes. We don't provide. This is not a legal, accounting, or financial advice. This is only basic information, but at least you kind of have the key points to check the pros and cons of every investment that you're putting your money on. The other disadvantage for having is the higher initial cost, because real estate, when you purchase from one real estate to another, they always require a down payment. So they base the amount of your down payment. It could be 3% or less, based on your debt income ratio is one, your credit score, and yeah, those are the two factors. And the source of income, the stability of the income that you're getting is another one that they're going to check. The other drawback of real estate is the market risk, because real estate value can fluctuate based on the economic conditions, interest rates, and local market factors. So when the inflation kicks in, it's really hard to buy real estate because it's more than the market before the COVID situation. Okay. Now, we're talking about the 401k. Well, I'm already here with my appointment. I'm trying to make as many live as possible. Let's see. Well, the 401k, it's remember, this is more to grow your money between 3 or even to 12%. And the 401k, you can acquire it by from your employer, because sometimes they match. If you contribute 5,000 and then the company is very generous enough for you, they can match it with another 5,000. So therefore, it actually grow your money while working for a company. So that's number one. But a question: can you open a 401k even you don't have an employer? Yes, you can. Even you are a freelancer, you can also open your 401k plan. Okay, so I'm already here with my appointment, but I'm just trying to give you guys some insights. No matter what, repetition is the master of learning. You're not going to absorb anything that I said, so all you have to do is follow me on my YouTube channel. Well, I have YouTube link and I'm using this Restream platform. Another thing for the 401k, how much is the maximum contribution per year? It's 23,000. And the good thing, on top of the investment option and the investment benefit, is also it also offset your taxable income. So instead of let's say you're a 100,000 earner, instead of you making a payment, being taxed at 100,000, and you put 10,000 on your 401k money, so that will be offset from 100,000. Your taxable income will go down by 90,000, because 10,000 of them was sparked to your 401k plan. Okay, so there you go. Again, guys, we're here in my meeting. As much as I want to continue my content, I have to go and talk to another client. So, guys, if you have more questions about the different topics that I cover, feel free to let me know. Comment below. We got and provide you our contact information. You can find us on our YouTube link, in any social media will do. Okay. So again, guys, because just like you, your tax needs a break. Thank you.